Hi, everyone. Good afternoon, and thank you for joining us today for our CEN Live Q&A. My name is Amanda Hatcher, and I'm the Senior Associate Director of the Cornell Entrepreneur Network, or CEN, as we like to call it. CEN is the university's professional business network, and we do both virtual and physical programming for alumni, parents, students, and friends. And I'm thrilled that you're joining us online today. To give you a little background on today's program, CEN Live gives you a direct line to a Cornell expert, such as entrepreneurs, VCs, faculty, and more. And the format is very simple. I'll be asking our featured guests the questions you, the audience, have submitted in advance and in real time. If you have a question, please just type it into the chat box, and we'll do our best to get through as many questions as possible in the 30 minutes that we have scheduled for today. Also, we will be recording the program, so stay tuned for that, and we will share the link to that with everyone that has registered. So if you come in late or if you have to leave early, you'll get it regardless. So enough with the logistics, we'll get started. I'm excited to welcome and introduce our guest today, Michael Roach. Michael is the J. Thomas and Nancy W. Clark Assistant Professor of Entrepreneurship at the Dyson School of Applied Economics and Management. Professor Roach's areas of expertise include entrepreneurship, innovation, technology strategy, and more. Mike, before the questions start coming in and before we get going, would you mind sharing with the audience a little bit more about yourself and what you're working on at Cornell?
Sure. So thank you for inviting me to participate in this, and I'm looking forward to kind of answering some questions and continuing some of these discussions offline as well. If people are interested in continuing the discussion, please feel free to contact me directly. So I've been at Cornell now 4 years, here I teach courses, both undergraduate and graduate courses in entrepreneurial strategy and technology strategy. So a lot of my teaching and research is around high growth technology startups, early stage startups, with a particular focus on things coming out of university research labs. I do quite a bit of research on university spinouts, on scientists and engineers, and they're both starting companies as well as working in startups. And so a lot of what I can really speak to today on a lot of questions are things around, high growth technology companies, intellectual property rights, licensing, commercialization strategies, and things kind of that nature. That's also what I do my research in. So a lot of my research looks at the scientific workforce, so looking at the career paths of science and engineering PhDs, and the university spinouts, so the companies coming out of the labs, and really focusing more on the people. So who's participating in these companies? What are the different roles? What roles do faculty play? What roles do the grad students play? As well as external people who join the teams. And then also some of the issues that early stage startups face in hiring and raising capital and things like that.
Awesome. That's excellent. Thank you very much for that background. So let's move into questions, and just a reminder to everyone online, if you have one that you didn't submit, or if you have another one that you'd like to ask, please just enter it into the chat box. You should see a little chat bubble that you can click on your screen. So thank you all for doing that, and let's move into the questions. So we grouped these a little bit, and so I think some of the first questions we'll start out with have to do with networking and mentoring with Cornell students. So the first one we got is, does Cornell have a mentor program through which alumni can mentor budding entrepreneurs?
Yeah, so I don't know if we have a formal program, but certainly we have a lot of opportunities. So there's a lot of students, both undergrads, graduate students, and PhD students, who are participating in early stage startups. They have ideas. They're looking at ways of trying to start companies out of their dorm rooms for a lot of the undergrads, or maybe coming out of the lab for some of the grad students. And so what I would do, one thing I would encourage is to just visit the Entrepreneurship at Cornell website, because there's a lot of events both here on campus in Ithaca, as well as Summit, which is in New York City in early November. There's other events in the spring, like Celebration, which is on campus. And also Cornell in Silicon Valley also has a lot of kind of entrepreneurship-related activities out on the West Coast. And so that's a way to find out what are kind of opportunities to try to connect with people. But you can also get in touch with Zach Schulman, who's the director, and he can provide you with a little bit more information on some mentoring opportunities. Or get in touch with Felix Levinsky, who's the managing director of our on-campus Blackstone Launchpad. And so he does a lot of mentoring with companies, with startups and entrepreneurs here on campus. His office is just a couple of doors down from Zach in the eHub in Kennedy Hall. And then also I would encourage you to get in touch with the eLab team. So that's Tom Schreiber, Ken Rother, Brad Treat, and Steve Gow. They work with a lot of eLab is a course-based program that takes early stage companies in the second semester of the fall. So these companies are working on this right now, looking at issues around feasibility, customer discovery, and how to build up the company in the spring. And so I think all these different programs that we have on campus could really benefit from mentors. So I think there's lots of ways to try to connect. But I think those are some of the people to get in touch with to find out what are some of the opportunities for connecting with students on campus who are starting companies.
Yeah, I think that's excellent. Very thorough. And the one thing I would just add too is we have an entrepreneurship listserv. So if people are interested in joining that, it's Cornell students, faculty, alumni, parents, really anybody can join. And we'll put information on how to join that in the chat and in a follow-up email to folks as well. But you'll see all sorts of requests coming through about what they're looking for, what they can offer, but definitely the Entrepreneurship at Cornell program is a great place to start to help with students too. So awesome. Okay, so the next question we have is, I am a Cornell alumnus of Taiwanese descent, 87 MS Biometrics, recently returned to Ithaca after 20 years of private sector work in New York City. I'm looking for a career pivot in Ithaca. I am motivated by my desires to improve the quality of life in Ithaca, to reconnect with the Cornell community using the business skills and technical knowledge I've acquired over the years. Can you give me some tips on how to get involved in the local enterprise opportunities? I'm most interested in technical entrepreneurship for social good, environment and sustainability, and public services.
Yeah, so I think some of the things I just mentioned probably will cover that as well. But definitely look at Felix Levinsky. So he has a form where you can sign up for a meeting online, and he's readily available to meet with people. And so he would probably be one of the best people to kind of put you, to kind of get in contact with here on campus, and then being able to put you, connect you with other people around. Again, we have a lot of activities. There's a lot of interest here. If you haven't been to one of the eHubs yet, there's one in Kennedy Hall and there's one in College Town above student agencies. Those are, there's a lot of activities going on there. There's classes there, there's demos, there's, pitches, there's all kinds of other events going on. Also, as Amanda mentioned, if you sign up on the listserv, you'll get announcements of different kinds of activities that are going on in Ithaca and Central New York.
Awesome. Perfect. So let's jump to another topic. I'm going to go to entrepreneurial strategy. So somebody asked, do you have any advice for early stage startups? Specifically, any advice with regard to corporate partnerships and not losing opportunities to bigger companies?
Yeah, so this is a pretty broad topic. And so one of the courses I teach is entrepreneurial strategy. So we cover a lot of topics, very specific topics on for an early stage startup. How do you think about the next steps, and what are the different strategies and the ways to kind of build the company out? So I think this one, I'm happy to provide a more detailed kind of response offline with a little bit more background of the company. But I think the first thing obviously is to ensure that you have an opportunity or a technology that in recognizing what the value proposition of that is for the customers. But also, as you're pointing out, it's really important to understand when do you need to have partnerships or some kind of arrangements with established firms in the industry, as well as when do you need to view them as potentially competitors. And so it's a little hard to give kind of a really broad generalizable response to that, because it depends on the technology, it depends on the industry, it depends on what are the resources and capabilities that are necessary to actually commercialize that technology and get it to market. So I think, oftentimes when I talk with early stage entrepreneurs, especially ones who are trying to commercialize the technology, oftentimes they tend to think that they have to forward integrate in the market and sell directly to the end user, to the customer. But in some cases, that is the best strategy. In other cases, it's actually better to develop the technology and to license it to an incumbent firm that has the capabilities that can take that technology and get it to market, or try to partner with them and co-develop with them to kind of build the company. So I think also in part of this is thinking about what is your exit strategy. And what's the best exit for the technology or the company you're trying to develop? And is it to be acquired, in which case you want to try to get these partnerships and find companies to work with that are potential acquirers of your company? Or do you think you have to forward integrate and really try to compete head to head with the incumbents? So I think that's one broad way to think about it. I'm not sure if that specifically answers the question, but if not, feel free to email me. We can talk more.
Yeah, that's one of the things with doing something like this is it can get a little specific and we don't have a lot of background. So thank you for offering your time to whoever submitted that question, and I'm sure they'll take you up on that. Along the entrepreneurial strategy lines, so we have another question about they've developed a proposal for a database based service and I'm confident of the market. They're a subject matter expert, but not a technologist. I noticed that many software companies are started by the technology folks, not the subject matter expert. I hesitate to hire programming support because outsourcing this is expensive and I'm concerned about being able to manage development tightly. How do I find good support without being taken to the cleaners?
Okay, so there's a couple ways to think about this. And so one is, at the kind of most basic level, it's really trying to figure out, how are you going to outsource this and what companies to partner with. Especially, this can be especially tricky if you don't have a technical background and you're not able to really build out the full specifications of what exactly you need, what are the features that you need, and to be able to manage that. And that's where having a technical co-founder or hire kind of a senior level technical employee who may not be doing a lot of the development, but can actually help with understanding what are the features to build in, what are the limitations, what's the best technology or platform to use, can be really very valuable. And I would say that there's two ways to view this. And I think this question mentioned that they noticed that a lot of companies are started by the technology people. At the same time, there's a lot of companies that are started by people with industry experience who understand the concept and they understand the customer in the industry, and they don't have the technical background. And actually, we see this quite a bit with companies started by, I think in particular, by MBAs who don't have a technical background, who have a little bit of work experience, or for people who have been in the industry 10, 15 years and see what are some of the really specific kind of opportunities out there, especially more B2B kind of opportunities. A lot of the kind of startups we see that are really celebrated a lot are really customer facing, but I think having some of that deep industry experience can be very important in identifying more business or enterprise facing opportunities. So the key there, I guess, to summarize this is one is recognize if you need to bring on a technical co-founder or a senior technical lead to help you build out the specifications and really understand what the technology is. And then once you understand that, it's a process of trying to evaluate what are the existing technologies out there, and do we need to, to what extent do we need to build out our technology, and how are we going about doing that? And the key decision there is really, is this technology going to provide us with some kind of competitive advantage? Is this really essential to what we're doing, or is it really a technology that we can easily outsource or actually buy perhaps to some degree off the shelf? I think that's a really important decision that companies have to make. I'm not sure, again, I'm not sure if that quite answers a specific question, but one is understand, what to know what you don't know is to know, and to be able to figure out, what kind of people you need to have in the company to have that technical expertise. Then think about whether this is something that we need to develop or whether we can buy something that already exists. And then if you do develop it, figure out how it's going to provide a competitive advantage, and look to companies that you can partner with or outsource to build the technology before hiring a lot of people internally.
Awesome. That's great. I think we actually have a question in the chat that's along those lines from Ryan Brown. He asks, Professor Roach, thank you for taking the time to speak with us today. What is the best way to find a partner / co-founder? I completed 8 years in the military, so I do not have any tech experience, but I do have an idea. I completed the EBV program at Cornell this year. Thank you, Ryan Brown, Air Force veteran. Thank you, Ryan, for your service. And take it away, Mike.
Yeah. So what is the best way? So networking is really very important. And, if you're here at Ithaca, there are a lot of, events to kind of meet people. I think, I guess it also depends on the stage of the venture. If it's still really early and you're still trying to figure out, who the customers really are and what the technology, what the opportunity really is, then I think, talking with people, talking with some of the entrepreneurs and residents and other faculty and staff here at Cornell who teach entrepreneurship about ways of trying to connect with people could be very important. But one thing I would encourage you to do is one thing I often see is that entrepreneurs are very protective over their ideas, and this can get to lead into some issues around intellectual property rights and how do you kind of capture value from the ideas. But it is important to know that when you share details of the idea to other people and try to find potential partners or co-founders to work on the company with, versus when do you try to protect some of these ideas? And it is hard for people to understand what you're doing and to get feedback if you're a little too reluctant to, kind of talk with people and share those ideas. So I don't know. So again, I don't know if that specifically answers the question. How do you find a co-founder or a technical lead? Another thing is that, here at Cornell, I think one of the things that you can look to is we have a number of students, both undergrads and MEng in the engineering programs who are, graduating and looking to work in startups and looking to be involved in startups. So I think another important distinction about that is to try to understand to what extent is some industry experience really, do you feel that industry experience in the technical field is really very essential, or is it really just understanding the technology? So if it's really understanding the technology, and I think, a student type person can really help with that. If it's having the industry experience, then, networking in areas where there are some of those technical people who you can engage with would be really important. So there's lots of opportunities, obviously, in New York City. If you happen to be in like the Boston or Cambridge area, there's Cambridge Innovation Center, and they have Venture Cafe and a lot of meetups. I'm sure there's a lot out in in Silicon Valley. So I think getting out to where those the people with the technical expertise who are interested in entrepreneurship, being involved in startups are, and networking to find people who have a right fit in terms of your personality and people you think you can work with, but also who have just kind of the right background to help you with the company.
Awesome. That actually sparked a couple more questions in the chat, so I'm going to follow up with it. Somebody said they're afraid that if they share their idea, someone will steal it. How do I protect my idea while looking for partners?
Okay, so this is also when we get into various ways of trying to, capture value from the idea. So if it is an invention and something that actually can be reduced to practice, then you have patents, which is a legal form mechanism, but they are very expensive to get, $10,000 to $20,000, $30,000 per patent, and they're even more expensive to try to defend. So they are essential, but they're not guaranteed protection. Other kind of contractual forms are non-disclosure agreements. They, again, are only effective to the extent that you have resources to hire attorneys to try to enforce them. So I think the better thing is really to think about, what are different aspects or kind of key features or parts of the idea and concept that you can disclose, and what are others that you need to kind of keep secret, at least in the early stages. So it's really more a matter of discretion and trying to understand how much can you fully disclose, how much do you keep secret, whether you can patent it or not, whether it's really going to be protected through trade secrecy and non-disclosure agreements. This also becomes very important for getting back to the earlier question of for early companies, early startups, working with other established companies or even outsourcing, is you have to disclose some parts of the idea, of the concept, and some parts of the technology to any company that's going to license it, any company you're going to partner with, any company you're going to outsource to. And so it is important to just understand what are the different legal mechanisms that are available for protecting the ideas, but also keeping in mind that trade secrecy is probably the most, I don't know if I want to say the most effective, but good managerial discretion of what to disclose and what to try to protect is probably the most important. So if I could just elaborate on that a little more, having a patent in and of itself is not a guarantee of protection. It's necessary, but it's not sufficient. Again, it's a hard question to kind of provide a very generalized response to. But it's a fine balance between disclosing the idea and then trying to protect some of the more fundamental concepts of the idea, so others can't imitate what you're doing.
Awesome. So just to let you know, you are hitting home with some people. Ryan, who asked about the co-founder, said it makes sense. So thank you.
Okay. Okay.
So you're not being too broad.
Okay.
So along the patent stuff, we got a question in advance from a solo inventor with a tech patent. And at pitch events, VCs always inquire about your team. How do I respond to that?
So just to make sure I understand the question, so this is an individual who has an invention, they got a patent around it, but they presumably don't have a team yet, and they're trying to approach venture capitalists to see if they want to, go further and actually come in for a pitch and then potentially invest. So how do you go about doing this? So one is what you need a team to help you commercialize the technology. So that's a hard question to kind of just answer in terms of how do you build the team out, how do you look for the right people. And we've talked a little bit about how to find technical kind of co-founders. In this case, you probably would need to find people who have some business development expertise or experience in that relevant industry, as well as some technical people to help you develop it. But if I could, having a patent in itself is again, it's protection, but that doesn't mean that it necessarily is is something that will become a company. So if we can look at universities as an example, for the past 30 years or so, universities patent a lot of the discoveries that come out of the research labs, but most of them are not licensed at all. And these are more what we think of these hands-off types of arrangements where you have, faculty and graduate students who come up with these ideas, they license these, the university owns them, and most of these don't really, as far as a technology, don't go anywhere, even though there's a patent around there, even though there's a technology. And the reason is because you need to have the people who understand how the technology works and how to build the technology to go and start the company. So you need the team to actually take that technology to the next level, to stick with it, to build it out and really fully commercialize it. So I would guess that's what the VCs are asking about and looking for is, if you have a patent and an idea, you might want to try to see if there's a company out there that will license it. There are a lot of other companies that are patent aggregators, and they'll buy or kind of put the patents together and then try to license a bundle of patents around similar kinds of technologies to other kind of companies. But what VCs are investing in is a team, and they want to know, how are you going to take that invention and build a company around it, commercialize that, and get it to either to market or to some kind of exit, which could be acquisition by another company.
Awesome. So let's move into some venture financing, because I feel like that's kind of where we're starting to take this conversation. So we got a question saying, everyone seems to be on the bandwagon for everything tech. However, the other half of entrepreneurship involves innovative consumer goods and also foods, of which my startup deals with. How can an entrepreneur with an innovative, unique food startup raise funds to get operational or even to the next level, especially when the markets are being crowded out with tech?
Okay. And so it sounds like this question is really thinking a lot about like venture capitalists and what kind of companies they're investing in, and how do you try to get that when venture capitalists are investing in tech companies. So I think it's important to understand that of all new businesses that are started every year, a very, very small share receive venture capital funding. I'm trying to remember the numbers, but it's somewhere around 5%, or probably less. I think the numbers I'm thinking of is around 1 or 2% receive venture capital funding. Now, that means that we have a lot of kind of small businesses that maybe are funded by the founders and the owners. Others may have kind of friends and family, or others may have debt, or getting some kind of loans or something. So we have to realize that there's just a small share of companies that actually are going to be receiving venture capital funding, and venture capitalists for the most part are making investments in early stage companies. Well, it depends on the stage, but investing in companies where they expect there to be a big payoff. And so they typically invest in companies that if there's a successful exit, it's going to have a really big exit. So that's what it's going to pay back the fund. And so that's what a lot of venture capitalists are looking for. So if you have a company that maybe has more measured growth projections, or maybe doesn't have the kind of the really big upside that VCs are looking for, there's a lot of other kinds of smaller investors, angel investors, who might be looking to make investments in smaller types of companies or specific kinds of sectors or industries. Depending on what you're starting, crowdfunding is another source, especially if you're coming up with some kind of, in this case, like a food product or something that can get on the market rather quickly. And these are, for a lot of the cases for the crowdfunding, it's really more like pre-sales. People are making these, they're putting money into the platform, into the developing this product, and what they get back is, in some cases, at the actual final product. And there's a lot of technology companies that have started that way. So I guess what I'd say is that VCs are making investments in very specific types of companies, and most VCs have like a life science side, which are largely investing in biotechnology and kind of diagnostics and delivery platforms and research tools and things like that, and an IT side, which is investing, a lot in kind of apps and software and some hardware based plays. And so that's kind of where VCs are looking to make investments. And so I think if you don't feel that this product or this company is really fitting in there, you need to look for some kind of boutique or niche type of VC who makes investments in those types of companies, or angel investors, or crowd-based funding, or kind of some kind of alternative sources of funding. Great.
So another question we got is, what is a common mistake people make when pitching VCs? Or maybe one thing you shouldn't do. Or...
I don't know if I can answer that. I have not been a VC, and I have not actually asked VCs that question. I can say that when I have VCs come in as guest speakers and talk with my students, one of the things that a lot of aspiring entrepreneurs are really surprised about is, and this gets back to some of the secrecy things, is when, how much they can disclose to VCs, whether VCs are going to take what you tell them and kind of give it to one of their portfolio companies or try to start their own company, are they going to kind of try to take your ideas? And then also, when do VCs sign NDAs? So I think one important thing to keep in mind is when you're making a pitch to VCs, their reputation is essential. That's how they get deal flow. That's how they attract really promising companies. So they're going to be very respectful with at least a good VC, a reputable CD, is going to be very careful with what you tell them, and they're not going to disclose that. And they're not going to give it to one of their portfolio companies. Also, VCs don't sign NDAs or any kind of other agreements like that during the pitch, and they typically, from what I've seen, they typically don't sign NDAs with the companies until they're at the point of making a deal. So even during due diligence, for the weeks or amount of time it takes to do the due diligence, they're talking with the companies, learning more about the technology. But they don't sign NDAs until an actual term sheet is given. So I guess the point of that is, I don't know what the mistakes are that people make when pitching to VCs, but I think one mistake could be trying to be too protective and not trying to disclose and really trying to be having trust in the VC. So I think if it's a good VC, you can trust them and you can share the technology and the idea, the concept that you have, and view it as a relationship building exercise, not as an adversarial type of relationship.
Great. So we're getting close to being out of time, so I'm going to ask one last question, and I think this could be kind of a fun one to end on. Somebody asked, what are the qualities and skills of a good entrepreneur?
Okay, so that's another hard one as well. In part, I would say that in the research side, we don't know. We don't have a really good answer for that. In part because it's hard to get really good data on this, and there's so much heterogeneity in individual backgrounds, in the opportunities, and the team, and there's a lot of things that are going on in these startups that we as researchers, as economists, can't see, and we can't account for them. And so we don't really have a good way of building these models. And also, there's a lot of luck that goes into what leads to success or failures in companies. And failures in and of themselves are not necessarily a bad thing. It could just be the market's really not ready for this, or that there are some technological challenges that are just that really good teams just can't overcome. So what are the good? So I think one of the things we can probably say, and again, there's not a lot of research on this, but obviously you need to be tolerant of risks, and you need to take risks. You need to realize that it's a risky venture. I think that's pretty obvious. Persistence is also pretty important. I think patience, but I think also really trying to be honest with yourself about the prospects of about why you're starting this company, first of all, what the opportunities are, and what the likelihood of success of this venture is probably also be a very good, quality for someone to have, just to kind of, to know when, this is, when to still be persistent and keep pushing on the idea versus recognizing that this may not have legs and this may be something where we need to kind of, look for some other opportunity. So sorry, I don't have a really, we don't know for sure, is I guess the way to answer that. But persistence, and being objective and being honest with yourself, I think, about the idea and the opportunities is important, I would say.
Awesome. Great. Well, thank you so much for your time.
My pleasure.
It flew by. I feel like we just started. So I hope I speak for everybody. I'm sure I do when we say thank you for sharing your expertise with us today. And I want to thank everyone for tuning in. We'll be sending a quick survey right after this, so please let us know what you think. And after you complete the survey, you'll be taken to a page with all of our past episodes of our CEN Lives. So look for that. And just so everyone knows, we did record today's session, and we'll post the video on that page, and we'll also send an email to everyone once it's up and running. So give us a day or two just to make sure it's up and live. And we just want to thank you again, Mike, for your time, and thank you everyone for tuning in, and we hope to see you on the next one. So have a great day, everyone.
Okay, thank you again for inviting me.
Thanks, Mike.
Okay, all right, take care.
Okay, bye.
Bye.